Inflation and interest rates are up. So, what's next? On the 27th of July, the ABS released the latest inflation data for Australia. A 1.8% increase over the June quarter brought the total increase in annual inflation to 6.1%, the highest levels it's been in Australia since 1990. At the same time, the Reserve Bank of Australia has been on a rate rise rampage, raising the cash rate 3 consecutive times, with 50 basis point increase in July, bringing the total cash rate to 1.35%. And while the mainstream media continues to suggest a period of doom and gloom, a property crash followed and/or by a recession, we suggest that the next 18 to 24 months may look a little different. You see, inflation is being pushed at the moment by both demand and supply side. But before we get to that, let's also consider one of the primary factors that drives inflation, and that is oil. You see, oil is involved in almost everything that we do. And quite recently, oil prices have been on a tear, peaking at just over $120 a barrel in June. But at the time of recording this, they've already dropped by more than 20% and are hovering in the high 90s. Now, if you consider the other two sides of inflation, the demand and supply side, on the demand side, it's been driven by stimulation packages, trying to hold up the economy during the period of a once-in-a-generation global pandemic. Think of things like JobKeeper, JobFinder, and HomeBuilder. Money has poured into the system. And on the supply side, the pandemic itself has caused havoc to supply chains, to input costs, and even now with the war between Ukraine and Russia, adding more fuel to the fire by putting pressure on things like wheat, oil, and gas prices. So we've been faced with this double whammy of rising inflation, but we prefer to take a glass half full approach to the matter. You see, as Peter Esho says, nothing lasts forever. The current Chinese factory lockdowns and the remnants of the global pandemic and the supply chain issues will not last forever. The war between Russia and Ukraine and the pressure that's placing on oil, wheat, and gas prices will not last forever. Already we're starting to see an easing in supply chain and production numbers as we start to come out of the global pandemic. Product prices are already starting to come down, and rapidly rising interest rates around the world are starting to finally claw back rising inflation. So rather than thinking the world is over, doom and gloom and Armageddon is upon us, we believe that a period of stabilization is ahead of us over the next 18 to 24 months once the interest rates have peaked out at the neutral rate, which many experts consider to believe is somewhere in the region of 2.5 to 3%. Like or share for more tips and videos.